China will issue $1 billion of 5-year bonds and $1 billion of 10-year bonds in Hong Kong. But why is China issuing dollar bonds? Chinese companies are expanding their overseas businesses rapidly, especially under President Xi's ambition of a modern Silk Road. Bonds are crucial for Chinese companies to raise foreign currency funds. Last year, Chinese institutions and firms raised over $250 bond issues to raise $120 billion in funds. However, the pricing of bonds needs a reference point, so the Chinese government decided to sell a sovereign bond to establish a benchmark for corporate issuers to measure against. Now, Chinese companies will be able to price their bonds against the sovereign issue. So what's at stake? The government announced the plan just before the Communist Party's 19th Congress, which ushered Xi Jinping into his second term. One of the president's policy goals has been to internationalize China's capital market. This new sovereign sale will test the market appetite for Chinese credit. Standard & Poor's and Moody's both downgraded China's long-term rating earlier this year due to concerns over slowing economic growth and ballooning debt levels. A successful sale will reassure global investors of the strength of Chinese assets and may help push down borrowing costs for other Chinese companies. Governments with lower ratings typically need to market their debt at higher interest rates. But this new issue is expected to receive strong market response given its rarity and growing demand for dollar assets.